What's up, guys? It's January 31st, 2024. First month of the year is done. Trading month, same thing. Pretty cool day. Got a lot of lines on the chart today. We did last week's range. This was yesterday's price action. It was a consolidation at highs. Market kind of has a double top right here. Then we had a strong sell at EOD, and today we opened with a gap down. This bar is a big, go like that. So we got a bear bar, and then bar one's bad continuation. But if we can look at the context of bar one, we have a FOMC. We have weird price action. I mean, not weird price action. It's like really small bars and then really big bars. So gap down, leg one, pullback leg two, and yes, this is a bull bar, but this is also a pullback. So because it was more of a range bar, so the markets came down and went up, and then came down and kind of traded around the middle. This is a pullback and a strong trend. Double top, leg one. Well, I mean, it's like one, pullback, leg two, pullback. So gap down, pullback, and bar two shows a macro double top here, and they break out. We trade lower for about an hour. We can see a leg one here, pullback leg two, pullback leg three, and then a double bottom. I want to talk about bar 18 in a second, but so we can count these legs and get a profitable trade out of it. It would be more of a momentum trade. I took it from here to here. I got out as this bar was turning up. Let's see if we go from body to body. Yeah, look, body to the low of bar 6. We can even do the body bar 6. Right there. There's your leg one, leg two move. This bar raced down, and these bars happen fast. They could be kind of a sell vacuum or more climactic. Then we have a trend line break with bar 18. Now I want to talk about bar 18 because Brook talks about when to look for reversals, and we have about 3 legs down if you count opposite bars, 1, 2, and 3. And this bar came down, bar 18 came down, and it came back up. So what does that mean? It means it grabs all the sell orders down here and then trap the bears right away. They can try and cover here, get short, and get out at the 50% level by shorting this low and then this high. Their average price would be right here, but they didn't get a chance. And this caused a bear trap, a very quick bear trap, bleeding for a few legs up. But the bull bars were getting weaker. See a strong bull bar on 21 or 19, smaller bad overlap on 20, really bad overlap on 21, and 22 is just a bear bar. Excuse me, let me. Yeah, there we go. And then I'll zoom back out when we get over there. So what I mean by bar 18, people put all their sell orders right here. Look at bar 18. It came down by 1 tick and then raced back up. And this is this happens in the third leg. So usually first and second legs are more momentum trades, and third and fourth legs could be fades. A third and fourth leg is not a fade. If it's a small pullback trend, you can get crushed. So be careful if you're trying to fade a small pullback bull trend or bear trend. Not a good idea to fade. It's not a good idea to ever fade a trend. So we have that trend line break. This bar traps and goes for a leg higher, and then it comes down. After this leg, my mind went into range bound because expansion, contraction, market cycle, trending. We can have a breakout here. So remember, the channel phase starts after the first pullback. So if this is a breakout bar, and then we pull back here, so that the market's channeling. And then what happens after a channel? It ranges. And what happens after a range? It breaks out. So the market cycle is resetting right here. And we can see that if you buy low, scalp out works. Buy low, scalp out works. Double top. Let me talk about this price action real quick. So we have a minor trend line break, push up. In strong trends, most reversals fail. Get another leg down, bears try and make a new low and fail, and you can buy the bar 30 is another good bar to buy for a couple points. If you're looking for how to get a PT with bar 30, I would just go for a measured move right here. 1-to-1, very easy scalp to take. And then there's a double top. The way a double top is formed is by bulls will buy the high of bar 32 and they get trapped. So then they buy lower, so they buy bar 35 and they get out on bar 36 at the original entry. So they get out break even here and they scalp here and they make a point because their average price gets pulled here. They make 1 point. Bulls will hit out of their position and bears will see this as range highs and then they get their 2 legs down. Same thing as that's how a double bottom is formed. Bears will get short here and then they will not have a chance to get out, so they short higher. In this case, this only came to the 50% level, so they didn't even get the double bottom, but look, see? So bears that got short on 38 right here, bears short 38, 39 goes up, they get short again, the market comes to 50% and they get out, and then that causes a leg higher because they're buying out, they're hitting out of their position, bulls are buying lows, higher low, and then the same thing happens again, double top. We can see the price is contracting here, creating a triangle. That's breakout mode. When that happens, it's best to wait for 2 bars in one direction. Today we had FOMC, so it was a little bit different, not in terms of breakout mode, but just what to do. I would wait like 30 minutes to an hour after FOMC because it's very easy to get whipsawed. I actually got trapped in here and had to hit out. I bought this close and I bought this bar. And I kind of chased this bar a little bit, so my break even was a little bit higher. I ended up getting trapped, and I just hit out around here. Caught it quickly. But if you weren't like me and you got short on this higher high double top, short here, this is an outside bar after a trend line break. 50% of breakouts will fail and reverse. So here we can see the failure in reverse. The higher time frame is acting as resistance now. Previously it was acting as support all these previous times, and now we have an always in direction flip on a higher time frame. The higher time frame is acting as resistance. We try and push, we gap down below last week's high. This purple line is last week's high. It's not labeled because I'm using fibs. We're oscillating around the 50% level, which can be seen as support, and then we break out and tag last week's low. So in one day we did all of last week's range. Not good for the bulls. Here's a asymmetrical leg 1, leg 2, leg 1, pullback leg 2, and then lots of pullbacks leg 3, pullback leg 4. Or you can count it like this: leg 1 to the wick of 65, pullback, parabolic, come here, pullback. That's a wedge. After the first official pullback, it becomes a channel, and now the market cycle is resetting. So you can see how the market cycle plays out throughout the whole thing. Breakout, pullback, channel, range, breakout, pullback, channel. And then once we pair the market cycle with what leg we're on, that's where our trade meets the context. That's what I've been trying to do. I kind of was a little bit stubborn there. I shouldn't have scaled in. Not looking good for the bears on the daily and the 45-minute chart. This is the 45-minute. This is the daily. We can see we did last week's range. Bulls are buying last week's range low. Be interesting to see, are we going to get a pause and then a continuation, or are we going to oscillate within last week's range? Anyway, this looks menacing on the 45-minute chart. Bear flag, double top, micro double top, strong breakout. Not a lot of overlap. It would be better if they closed below last week's range, but they didn't. Oof. So pretty good day. It was FOMC. Hope you guys made some money. Yeah. I'll talk to you guys tomorrow. Thank you for watching these videos. I see the comments. Thank you for all the support. Welcome to the new followers. I trade Al Brook's price style. All my breakdowns revolve around the way Al Brook sees price action. I take the course. I study his books. Check it out. Let me know if you guys like this, if I could do anything better, or you want to see anything different. I'm going to try and have some more structure to these videos, so it'll be about like the market cycle and then talking about leg 2 moves, because that's how I'm going to be trading. It's a good way to trade because the market cycle repeats itself. So yeah, have a good one, everyone. Thank you for your support. I'll talk to you guys later.